Profit on NDTV Profit, and I'm your host Himatsingka Seide. Along the next half an hour, I'll be taking up all your stock related queries. So don't forget to call us or WhatsApp us. The numbers are there flashing on your screens right now, viewers. And on the show, I'm being joined by Gaurav Sharma on the technicals, and our fundamental guest will be joining us very shortly. Welcome to the show, Gaurav.
Hi, good evening.
Good evening.
Thank you.
Yes, so let's get started with the first query, and I'd request you to help us with the fundamental queries as well, till the time our fundamental guest joins in. First up, we have Pooja's query. She hails from Pune and she's asking whether it's the right time to invest in Eternal for long term. So Gaurav, what's your sense? Are these the correct levels for somebody who wants to, invest in it for a longer period of time?
Firstly, I'd like to specify here long term means a period over 12 months. So the answer is yes. Eternal is doing all good. This time, the quarter gone by, the results were phenomenal. Blinkit numbers especially came out, and it was a total surprise. The volumes outpassed that of the regular Zomato figures. So yes, they have opened another line of revenue from themselves, and they are doing all good. The company is running into profits on quarter basis. This time around also they came up with good set of numbers. These are good levels to consider the stock for investment purpose.
Okay, thank you so much, Gaurav, for that. And we have another WhatsApp query with us. Gauri from Gurgaon has written to us asking whether it's the right time to invest in Tilak Nagar Industries for long term. So, Gaurav, how are you viewing this counter and how is it looking on the charts as well?
Of late, a news came in. The result was that the stock ran up too sharply. It was earlier, later half of July and the earlier period of August month. This stock, Tilak Nagar Industries, witnessed a stellar up move straight away, rising from 380 levels to around 480, 500, even surpassed 500 odd zone. So I think any further decline from these levels close to 440, 450 zones is a good buy zone for this stock. So buy on dips is the strategy that the viewer should adopt.
Okay. So buy on dips, strategy is what the viewer should be eyeing at. And with that, we are being joined by a fundamental guest, Avinash. Good evening. Welcome to the show.
Yeah, good evening.
Yes. So, Avinash, we were discussing about Tilak Nagar Industries, and I was, checking with Gaurav that what are the correct levels that for somebody who wants to invest in it. So, what levels should they be looking at? So, he has suggested that, you should be buying on dips. But fundamentally, how strong is Tilak Nagar Industries according to you?
No, I think, within the liquor space, the company has been putting up a very strong volume growth, also aided by a good profit growth. And I think the first quarter numbers have been quite strong. The management commentary has also been strong. And again, they have been in the news also for considering a very large acquisition. So I think in the very near term, I think the stock will consolidate because a lot of cash is going to be required to buy this acquisition. Some of it will be funded by debt and some of it will be funded by equity. But I think around 450 odd levels in the stock corrects, I think it would be a good opportunity to accumulate it. I would say that, the investor needs to keep at least a time frame of 12 to 18 months because this acquisition is going to give a big leg up to the company's revenue and profitability, but it will take some time for this acquisition to culminate and then consolidate. So I think take a 12 to 18 month time frame, and I think around 450, 455 levels would be a good entry point, for a medium to long term holding.
Okay. Thank you so much for that. Now we're being joined by our first caller on this show. Hi, Kamath. Good evening.
Good evening, madam. Madam, my query is regarding Acme Solar.
Yeah.
I am holding 1,500 Acme Solar at the rate of 290 rupees.
Yes.
Now, I bought that share looking at the result.
Yeah.
When I went in detail, the finance cost is going, quarter on quarter it is going up.
Yeah.
Only thing is the promoter holding is excellent. Now I think very soon, as per the SEBI norms, they have to cut down their holding also. So I just wanted to know, should I get out of it, or if I sell those shares, where should I invest?
Okay, understood. So, Avinash, I'd like to come to you because, Kamath is sitting on a loss of almost 12,000 rupees there with Acme Solar. So, So, what he should be doing at this particular time? Should he stay put with it?
No, I think he should hold on because see, my guess is most of the solar companies are operating, on a very high order book kind of ratio. Acme Solar also has a very decent order book, and at least for the next 12 to 18 months, the revenue visibility is strong. The point which the investor raised that interest cost has gone up. See, I think this is a very large working capital intensive business, so interest cost will go up. But on the other hand, revenue will also go up, the operating EBITDA also will go up. So I think, the company is in a decent position to service that kind of interest cost. And I think the investor seems to have purchased this quite recently. So, you need to give in a time frame of at least 12 to 18 months. Now the solar story is more or less known to everybody. So maybe there will be some consolidation in the stock. The investor should not take a short-term view here. The renewable sector is going to grow quite rapidly. And I think at least for the next 2 years, the outlook, according to us, even the government is going to support this sector in a big way. So keep a positive view and keep a little time and patience on your side. I think in the short term, the stock will consolidate, but in the longer run, I think you could expect a decent risk reward.
Right, right. Thank you so much for that. Now let's go across to Vinay, who is joining us on the phone line from Bengaluru. Hi, Vinay. Good evening.
Hi, ma'am.
Yes,
Good
how
evening.
can I help you today?
Yes, ma'am. I have 6,000 shares of NICL,
Okay.
National Insurance.
Yes.
So I just want to know the opinion of Avinash sir. Like in 3 to 6 months, what is? Please suggest me what will be the means on his opinion on this.
Absolutely. So, Avinash, NICL is the counter in which Vinay holds 6,000 shares. He bought it at 210 rupee per share. So, how strong fundamentally this counter is, and what should Vinay be doing with this investment of his?
First of all, NICL has been in the limelight, after Murugappa Group has taken over this company. And as everyone is aware, Murugappa Group is known for its project execution and turning around companies. This clearly happened in CG Power, and now markets are very positive on this company. And we have seen a very big runaway rise in the stock price. So, if the investor has purchased this stock, then I think he needs to give in at least a couple of years before he sees the, results from these companies to come in. Such kind of investment calls which are made on the promoter, pedigree, and where Murugappa Group is involved, I think you need to give in a slightly medium to long-term time frame before you can see a risk-reward coming in your favor. So I think keep the faith and continue to hold. Maybe in the short term, the stock may remain in a very small range, but longer term, I think, the Murugappa Group has got a very strong execution record of turning around companies, and that definitely is the reason the stock is in the limelight. So please hold on. Keep a time frame of at least 2 years. Only then you will get a better risk reward.
Absolutely. Thank you so much for that. Now we're being joined by Udit on the phone line from Mumbai. Hi, Udit. Good evening.
Good evening, Himanshu, and thanks a lot for taking my call up again, and good evening to the panelists.
Most welcome. Please go ahead with the query.
Okay, I have 75 shares of IRM Energy.
Yeah.
And I bought it at about 461, so I am losing quite a bit of money. Now I need to know, I'm ready to wait for a month, for a year or more. That's absolutely no problem. I just need to know the fundamentals of it. And is it a right time to average it out?
Okay, okay, understood. So, Avinash, firstly, is it the right time to average out, in IRM Energy? And what are the company's long-term growth levers looking like?
See, first of all, IRM is into the gas distribution business. And I think they have a very large market share in the state of Gujarat. So my sense is, I think the stock has corrected sharply despite the fact that the company has got decent fundamentals, a very good clientele, and a very strong balance sheet. So I think, the investor seems to have purchased it at a slightly higher level. But if you look at the institutional pedigree of investors holding the stock and the kind of growth opportunity for gas distribution in India, I would not be surprised that over the next 12-15 months, things could improve and FY26 could be much better than last year. I think the stock has corrected sharply, so he can definitely accumulate at these levels, but keep a time frame of at least 12 to 15 months as a time frame to stay invested in the stock.
Right, right. And Gaurav, I'd also like to come to you since, the stock has corrected sharply as we can see, but still, what are the charts looking like for a shorter period of time?
Himachi, charts are clearly negative. The stock has not performed from quite some time now. But the things can turn around as Avinash has rightly pointed out. The company is doing well, financially stable. Valuations are also fair, not too expensive at all. So I think it is just a matter of time that we would see a reversal coming in. But in the immediate near term, yes, little more downside is pretty much possible. Its all-time low is close to 27 odd levels that somewhere can be tested once again. As of now, some more room of downside is there, but the viewer should keep a long-term perspective, and a reversal can be expected around the.
Right. Thank you so much for that, Gaurav. Now we are being joined by Mr. Murli on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am.
Yes.
Thank you for taking up my query.
Please go ahead with the query.
My query is a fundamental analyst. I bought a share called Thejo Engineering, 300 shares, at the rate of 3,171.36.
Yeah.
And the last 52-week low is high is 28.74. And the upper circuit, the highest was 3,700.
Yes.
So whether I should hold, I bought about a year back.
Okay.
Still, it's underperforming. Should I switch over to Thermax or Titagar Wagons?
Okay.
Or continue with this for next 18 months?
Understood. So, Avinash, like we can see that Mr. Murli is incurring a loss of nearly 4 lakh rupees there in just a year because the companies, the shares have fallen from 3,100 levels to 1,800 levels very drastically. You know, the stock has fallen. So, what suggestion do you have for Mr. Murli there? Should he be switching his positions to probably a Thermax?
See, I think clearly Thejo Engineering is a very well-established player in the specialty coating market. And I think, one kind of observation from my side is that he's purchased the stock at a very high elevated level. Now, for that stock to go back to that level in the next 12 to 15 months is going to be a little difficult. So my suggestion would be that he could switch over to maybe some of the private sector banks, or maybe, what he mentioned as Titagar. Titagar also has a decent order book. I think the railway sector is definitely growing quite rapidly. And this is a company which supplies not only wagons to the railways, but even on the metros, they've got a large order book in the pipeline. So my sense is, again, you need to give in 12 to 18 months before, the new investment starts yielding you a better risk reward.
Right. Thank you so much for that. And Gaurav, I'd like to come to you since, Avinash has suggested Mr. Murli to switch his positions to probably, a Titagar. And currently, if you can, look at the numbers, it's trading at 843 and was also up in trade today over 2%. So, do you advise him to enter at these levels? Gaurav? Because Avinash, I'd like to come to you till the time we get. Okay, so viewers, Mr. Murli, I hope there's some issue happening, but we'll get back to our experts shortly on this. But Titagar, Thermax, and Thejo Engineering. So the stock is feeling some pressure at the current moment, and probably you've bought it at elevated levels, and hence our experts are suggesting you to take fresh positions in Titagar, and we'll take our experts' view also whether 843 are the correct levels to take fresh positions. But we have Gaurav now with us. Gaurav, if you can just enlighten our viewers, and also Mr. Murli, if he wants to switch to Titagar, are the correct levels, the 843 are these the correct levels to take fresh positions?
See, for the railway stocks, I am having an opinion that they will take at least 2 to 3 more quarters into consolidation, and then they will start, resume their up move. Similarly, with Titagar, also it is underperforming for quite some time now, just like with other railway stocks. Technically, too, it is looking weak. The chart structure is weak. It may take some more time consolidating around this range of close to 750 on the downside, 950 on the higher side, and a sustainable break above 950 will open the gates for a further up move towards 1200, 1250 odd levels. But this particular thing can take 3, 4, maybe 5 months to actually break out.
Right, right. Thank you so much, Gaurav, for that. Now let's go across to another caller who's joining us from Tirupati. Hi, Venkat. Good evening.
Yes, good evening, madam.
Yes, how can I help you today?
Madam, I have recently allotted an IPO called Shanti Gold International.
Yeah.
Yeah, I want to know about the stock. It moved up to 274 and now it is trading at 224. Why it has downfall? Yeah, I want to know the thing about that stock. If the analysts don't have coverage on that stock, please explain about Enviro Infra.
What is the other counter that you mentioned?
Enviro Infra bought at
Enviro
231.
Infra. Understood, understood. But I'd like to take Avinash's view on it. Avinash, do you have any suggestions regarding Shanti Gold?
Yeah, I think Shanti Gold has been a recent IPO listing, has done well. In fact, the quarterly numbers which came out for June have been very robust. Both the revenue and the profit have increased significantly. And I think, see, gold, as the trend goes, I think the real business for gold companies comes in the second half of the financial year. So April to June has been very robust. The other gold companies have also done remarkably well, like Kalyan or and Titan. But I think my sense is if the investor can give in another 6 to 12 months, because the real season for gold companies comes, when the festival season starts from September to, March. So I think that would be a better time where some further re-rating could happen. And as far as this query, why the stock is corrected, I think market sentiment has become a little choppy. I think, investors have booked out money, but the fundamentals of the company remain strong.
Right, right. Thank you so much for that. Now we are being joined by Ravi on the phone line from Hyderabad. Hi, Ravi. Good evening.
Yeah, hi, very good evening.
Yes, please go ahead with the query, Ravi.
I have a query on TVS. I have a query on TVS Motors.
Yeah.
So, is it a good? At what levels is a good time to buy?
Okay, okay.
My time horizon is 1 year to 2 years.
Okay, 1 to 2 year is what you're looking at. Avinash, TVS Motors, in its August auto sales number also, they were pretty decent, and currently it's trading at 3,356. So do you suggest for somebody who wants to take fresh positions in the counter, so these are the correct levels to take, to look at?
First of all, TVS Motors is a large cap two-wheeler stock, and I think one cardinal rule in the market is that what is already known to the markets, their alpha returns are not possible. So I think if the investor is happy with say 12 to 14% returns over the next 12 to 15 months, then I think he could definitely even consider buying the stocks at the current price or maybe buying on slightly decline. But one thing which I would like to tell you is that in these kind of large cap stocks, incremental substantial returns are not possible. So if he's happy with 14-15% return over the next say 12 to 15 months, I think he can definitely do a SIP and actually accumulate the stock.
Okay, okay. Thank you so much for that. And now we're being joined by Dheeraj on the phone line from Hyderabad. Hi, Dheeraj. Good evening.
Hi, ma'am.
Yes, please go ahead with the query.
Good evening. My query is regarding Adani Green, ma'am. I'm holding 270 shares at 970 rupees.
Yeah.
I would like to know both long-term and short-term view regarding this stock, ma'am. The recent results of the company are very good, and many brokerage houses have given a target of around rupees 1,200 rupees.
Yeah.
So when can I see an upside? Where can I add more? Is my query, ma'am.
Okay. So Adani Green Energy is the counter in which he is sitting on a loss of around 10,000 there. So Gaurav, I'd like to come to you on this one. Are you seeing any sort of positivity on the charts? Any sort of bounce back that you're anticipating so that he can narrow down his losses, and how are you viewing it?
Only positive as of now from a short-term perspective I can see is that the share is trading at the bottom near the support lines. 900, 890 is a support zone that will be a stop loss as well. So that I'll suggest for a short-term trading perspective. And the stock is having some kind of resistances around 1,000, 1,010, 20 zones. Once these are taken out, there is potential for a 1,070, 1,080 kind of a run-up. And a real run-up would come up once the stock is able to go past and hold above 1,100 levels for say at least 2 to 4 trading sessions on a closing basis. Then a reversal can be expected, but still it is a too far of a story now.
Okay. Thank you so much. And just a quick disclaimer for our viewers that NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company, the channel you're watching right now. And now let's go across to Manoj, who's joining us on the phone line from Hyderabad. Hi, Manoj. Good evening.
Yeah, hi, good evening. This is about Himatsingka Seide. I'm holding 5,000 shares at 155.
Okay.
The stock has come down more than 20% for the last 1 month because of the tariffs and all. So I would like to know the long-term and short-term prospects of this stock. And also I would like to know whether I can add more here at this price.
Okay. Since, Himatsingka Seide is seeing some sort of tariff pressure there, if I can just call it that way. Avinash, how are you viewing it, and what advice do you have for our viewers, not just Manoj, but for somebody who has invested in it and has similar fears regarding the counter?
No, I think one thing is very clear that Himatsingka is a global textile exporter of silk, fabrics, and I think US is a very large customer for them, and that's the reason the stock has seen a kind of a sharp correction. See, my sense is that if the investor wants to know the short-term view, it's going to be bad, at least for the next couple of quarters, because margins are going to be under pressure. It's not easy for any company to survive with a 50% tariff. And I think at least in the very near term, it could mean order cancellations, it could mean slower revenues, margins could come under pressure. And we definitely be looking at some solution from the US, hopefully by October or November. If at all the tariffs come down to 25% or 15%, that could be a good silver lining for the company. But at least for the next 1 or 2 quarters, I would say that it's going to be a little challenging. The headwinds are very large. And, investors who are holding it should at least keep a 12 to 18 month time frame, because to shift to another customer markets is not going to be easy. It will take some time. So prefer a hold, but I think take the time frame as 12 to 15 months.
Okay. So hold probably. Short term, Himatsingka Seide and the counters might see some pressure, but you can hold it for a period of 12 to 15 months is what our experts are suggesting. And with that, we have Siddharth joining us on the phone line from Nellore. Hi, Siddharth. Good evening.
Hi, ma'am. Good evening.
Yeah.
Ma'am, I have been holding a Trident share, which I have purchased at 63, ma'am. I have 6,000 shares of Trident.
Okay.
Currently, I am in loss.
Yeah.
Can I hold them for next 2 to 3 years, or can I put loss right now?
Okay. Avinash, since Siddharth is incurring a significant loss of, almost 1.5 lakh rupees there by holding 6,000 shares of Trident, he bought it at 53. So what would your advice to him be? Should he, stay invested? Should he hold it? Or should he be booking his losses at this particular time?
I think even in Trident, the bigger loss is, the company exports terry towels to Europe and the US markets. That is also one hit which the company is likely to face in the coming, say, 2 to 3 quarters. But they also have a paper unit. They also have a agrochemical unit. So I would say that, already the price has halved from the investment price of what the investor has paid. So I think, wait for at least the second or third quarter results. And at that point of time, maybe, there's some kind of tailwind one could accumulate. But as of now, I think he should just sit tight, keep a time frame of at least 12 to 18 months.
And Gaurav, I'd also like to take your view on it very quickly. Trident, because, he bought it at 53. Currently, it has dropped down to 27. So how low also it can go? Like, what are the charts really looking like?
Charts are indicating further weakness. There are no as such signs of a consolidation here as well. Immediate downside support is placed somewhere around 25 to 22 zones. I think that's where the stocks should actually consolidate, hold, and start its reversal up move. So it's just fingers crossed. Take a stop at 22 if it is short of position.
Okay. So thank you so much, Gaurav, for that. And with that, I'm afraid that we are running short of time. But thank you so much, Gaurav and Avinash, for being there always and, solving all our viewers' queries so patiently. Thank you so much once again. And viewers, with that, it's a wrap on this edition of Ask Profit. But please don't go anywhere, as there's a lot of action lined up ahead on the other side of the break.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं दिवाली के अंदर।
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy, join us as we decode what these reforms mean for businesses, investors, and you.
Tech has changed, so should your tech show.
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed, so should your tech show.
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI?
The Nifty and the Sensex rally in the latter half of trade. Autos, metals and IT lead the gains in the Nifty as it snaps a 3-day losing streak. In a powerful message to the Western world and especially to US President Donald Trump, the leaders of over half the world's population come together in a show of solidarity at the SCO summit in China. Prime Minister Modi and Russian President Putin hold a 45-minute bilateral meeting on the sidelines. In a massive diplomatic win for India, the SCO joint statement condemns the Pahalgam terror attack. Remember, just 3 months ago, Defence Minister Rajnath Singh had refused to sign this statement since it did not contain a condemnation of the deadly attack on India. President Trump calls the India-US relationship a one-sided disaster, says India has charged US with such high tariffs that American businesses are unable to sell into India. Deutsche Bank plans to sell its India retail banking business. Sources say the bank is in early discussions with potential buyers. August GST collections grow over 6% at 1.86 lakh crore rupees, with domestic GST rising by 9.6% to 1.37 lakh crore, but import GST drops by 1.2% to around 50,000 crore rupees. UPI crosses record 2,000 crore transactions in a month for the first time in August, with a daily average of 64.5 crore rupees. Transactions of up to 24.85 lakh crore rupees were carried out during the month. It's red alerts for parts of Punjab, Himachal Pradesh and Uttarakhand as rain lashes northern India. At least 300 are dead in Himachal and 16 devotees in the Mani Mahesh Yatra in Chamba. All educational institutions shut till Wednesday in Punjab. Hello and welcome, a warm good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. On to the big breaking on the top of the show today. Sources told NDTV Profit that Deutsche Bank is planning to sell its India retail banking business. The German bank is said to have invited bids from both domestic as well as foreign lenders. I have my colleague Vishwanath Nair joining us on the phone line with more details. Vishi, what are you picking up on this matter?
Right. So what our sources are telling us at this point in time is that there are early discussions on with potential bidders for Deutsche Bank to sell its retail banking business in India. Of course, Deutsche would be joining the list of other such lenders who have exited the India retail business, specifically Citi, which sold its retail banking business to Axis Bank back in 2021. And then, of course, earlier this year, UBS has also sold its wealth management business, the domestic wealth management business in India, to 361. So if you were to look at where the current landscape is for foreign banks in the retail banking or the private banking business as such, there's a lot of competition coming in from private sector banks. And that is why a lot of lenders have actually pivoted to focusing on wealth clients, because that is how they ensure that they remain competitive and profitable in a market like India. Apart from, of course, what these legendary older lenders are doing with their India retail businesses, you've got other lenders who are coming into India. In fact, we know that Sumitomo Mitsui Corporation, banking corporation, has actually bought stake in Yes Bank. They are looking to control, of course, majority stake. And then there's also NDB Emirates, which is the Emirates-based bank, which is looking to buy IDBI Bank in India. So you're seeing action on both ends of the spectrum. One, bankers getting out of the India retail business, while the other trying to enter this business. But for Deutsche Bank, of course, the overall India business is about 67,000 crore worth of loans and 73,000 crore worth of deposits. This is, of course, the total business, which includes your government loans, the corporate loans, priority sector, as well as the retail banking businesses. So all of that put together is about 67,000 crores of loans and 73,000 crore in deposits. We need to see how this deal progresses. Of course, we'll keep track of all of that on NDTV Profit.
Right, Vishwanath, as you said, we will continue to track the story and give you a lot more updates as and when we get to know of them. But it was a masterclass in messaging at a global platform as three of the most powerful leaders in the world came together to showcase laughs, hugs, and friendship. The message was clear. The Western world was being shown its place in the global order and told that threats through tariffs simply would not work. Prime Minister Modi and Russian President Putin's obvious friendship was on display as they walked together and spent 45 minutes in bilateral talks. Conspicuous by his lack of limelight was Pakistan's Prime Minister Shehbaz Sharif. He was seen looking on with a grim expression as Prime Minister Modi, Chinese President Xi and Russian President Putin engaged in informal banter minutes ahead of the plenary session, another powerful message that China and Russia had chosen to India over Pakistan. And the icing on the cake is the fact that the joint statement of the member countries of the SCO condemning the April 22nd Pahalgam terror attack and calling for the perpetrators to be brought to justice. The situation was very different barely 3 months ago when Defence Minister Rajnath Singh had refused to sign the statement as there was no mention of Pahalgam in it. Diplomatic trade and cultural ties between Asian countries have come a long way in just a few months. And India has been bearing the brunt of ruthless terrorism for the last 4 decades. These were PM Modi's words from the SCO summit in China. He condemned the attack, emphasizing gratitude to the friendly countries that stood with India. Let's listen in to his remark.
Excellency, भारत पिछले 4 दशकों से निर्मम आतंकवाद का दंश झेल रहा है। कितनी ही माताओं ने अपने बच्चे खोए और कितने बच्चे अनाथ हो गए। हाल ही में हमने पहलगाम में टेररिज्म का बहुत ही घिनौना रूप देखा। इस दुख की घड़ी में जो मित्र देश हमारे साथ खड़े रहे, मैं उनका आभार व्यक्त करता हूं। यह हमला केवल भारत की ये मानवता में विश्वास रखने वाला हर देश, हर व्यक्ति को खुली चुनौती थी। ऐसे में प्रश्न उठना स्वाभाविक है, क्या कुछ देशों द्वारा आतंकवाद का खुलेआम समर्थन हमें स्वीकार्य हो सकता है? एक्सेलेंसी, हमें स्पष्ट रूप से और एक स्वर में कहना होगा कि आतंकवाद पर कोई भी डबल स्टैंडर्ड स्वीकार्य नहीं होंगे। हमें मिलकर आतंकवाद का हर रंग में, हर रूप में विरोध करना होगा। ये मानवता के प्रति हमारा दायित्व है।
And in a ground report from Tianjin, Igor Zadunov provides details on Prime Minister Modi's meeting with the Russian president. Let's listen into his report.
Vladimir Putin and Narendra Modi began with more than just a handshake. In fact, it was a very warm hug, the one that two close friends might give each other after not seeing each other for quite a while. And indeed, it continued then in a similar fashion when Vladimir Putin and Narendra Modi both got into the same car, into the limousine of the Russian president, as they pulled up here to this Ritz-Carlton hotel where they held a bilateral meeting. But as you'd expect maybe them to just walk out and walk into this building and get straight to work, this is not exactly what happened. We did see the delegations and all the delegates, both from Russia and from India, walking in here, and some of them even greeting us, the press, and heading upstairs. But the limousine with Vladimir Putin and Narendra Modi, the Prime Minister of India, it just stayed there, parked right outside the front entrance. It was a good 45 odd minutes before the two leaders finally stepped out of the car, out of the back seat. And it clearly indicates they had apparently a lot to discuss very much in private. And given the tweets that Narendra Modi posted on his personal page, on his official page, well, that conversation couldn't have gone better.
And right after the SCO summit, which witnessed a powerful and optical union of India, China and Russia, US President Donald Trump wrote another cryptic message on Truth Social, taking a sharp stance on India. He described trade relations with India as a totally one-sided, citing India's high tariffs on US exports. He also added his long-going criticism on India's purchase of Russian crude. But here is the most interesting part, viewers. Trump went on to say that India has now offered to cut their tariffs to nothing, but it's getting late, saying that India should have offered zero tariffs years ago. Now, this leaves us, as Trump suggested, with many points to ponder upon. How pragmatic is it for us to offer zero tariffs and on which goods? And if it is indeed getting late, does India stand the chance of locking a deal or not? While there's no official government response to Trump's claims yet, we will continue to track the latest developments and report them to you. But moving on, as Trump's tariffs continue to cause uncertainty, former RBI Deputy Governor Michael Patra believes that the tariffs are a one-time show. While speaking at the Alara India Dialogue 2025, he said that he doesn't see a major impact on India. Let's listen to his comment and more.
I would treat the Trump tariffs as a one-time shock. I'm not too bothered by it. India especially is not so affected. 85 to 86 billion is our annual exports to the US, of which I think 45 to $48 billion is affected. The rest is exempt. That we can easily handle through governmental support. But I worry about a different kind of thing. What is the purpose of the tariffs? The purpose of tariffs is to depreciate the US dollar. Yeah. This has been done in the past, and every time this has been done, engineer depreciate, it has been very messy. The first one was in 1973 when the dollar's convertibility to gold was snapped by President Nixon, and we know the story after that. The second was in the 70s when they decided to inflate away the debt. Okay. And it took a Volcker to bring sanity to the situation. This is what I worry about. that this is an engineered attempt to depreciate the US dollar.
And as Michael Patra believes that these US tariffs are a one-time show, the government is looking at easing SEZ rules, that is Special Economic Zone rules, to support exporters amid the hit from US tariffs. Sources told NDTV Profit that officials are studying a plan to allow SEZ units to sell in the domestic market without paying duty. Now, for more on this, let's go across to my colleague Rishabh Bhatnagar. Rishabh, over to you.
Right, in yet another step that the government is mulling over in terms of exporters' protection in the face of heightened US tariff uncertainties is the fact that the government is looking at easing the special economic zone rules. And this will be done basically by allowing these SEZ units to sell in the domestic market without duty being taken from them. So it will be done in a manner where duty is foregone for companies that are selling into special economic zones and special economic zones units that are selling in the domestic market. What we're also picking up is that exporters have conveyed to the ministry that the fact that duty-free domestic sales will also help them absorb the cancelled orders that may come in from the US going ahead because of 50% tariffs and the tariff disadvantage that India currently is at. We've seen that SEZ exports, they form up about $180 billion in the last FY25, so a sizable chunk of India's exports. And this is a part of the Commerce Ministry preparing short, medium, as well as long-term plans to support exporters in this phase of heightened uncertainties and heightened tariffs.
Let's now give you some key updates on GST. India's GST collections held steady in the month of August, rising 6.5% on a year-on-year basis to 1.87 lakh crore rupees. Domestic collections drove the growth, but import revenues dipped and refunds fell nearly 20%. Net collections stood at 1.67 lakh crore rupees, up over 10% from last year. Experts warn, however, that upcoming rate rejects and a slowdown in sectors like online gaming could trigger a dip in revenue in the coming months. Now, speaking of the upcoming GST Council meet, Nilesh Shah of Kotak AMC says any market reaction to GST rate cuts will be short-lived, but the real gain lies in reviving private investments. Neelkant Mishra adds that the cuts may not weigh heavily on government revenue as stronger corporate earnings will help balance the hit. These views come ahead of the GST Council meet, which is scheduled to take place on the 3rd and the 4th of September, where rate cuts will be discussed to soften the blow of Trump's 50% tariffs.
So GST rationalization can serve multiple purposes. It's like one stone and multiple hits. The first will be to reduce the complexities around GST. We all have known that one or two rates compared to multiple rates which we have will be more beneficial to us. The second will be to stimulate domestic economy by supporting consumption. By and large, we have been more supply side focused. Now, GST rationalization could be demand side focused. Third, the stimulation will also help us negate adverse effect of US tariffs. So timing wise, it is coming at appropriate level.
You see, this acts like a stimulus, and in fact, it may sound oxymoronish, but this is a stimulus without any meaningful fiscal cost. And let me explain to you what I mean by that. So in the worst case, in case, if all items from 28 were to go to 18, all items from 12 was to go to 5, the total revenue loss for center and states put together would be about 1.7 trillion rupees. Given that some items are going to go from 12 to 18, some are going to go from 28 to 40, the number should be lower than that. This will also aid formalization. This will also help with volume growth in segments like autos. So the net impact should be meaningfully lower than that 1.7 trillion. But that's the worst case that I would think of.
And Prime Minister Modi is set to inaugurate Semicon India 2025 tomorrow at Yashobhoomi in Delhi. The event will take place from the 2nd to the 4th of September and will focus on areas such as R&D, investments and AI in the semiconductor space. Let's go across to my colleague Rishabh again for more on what to expect from this 4th edition of Semicon India. Rishabh, back to you.
Right. The most interesting event coming out of India's semiconductor industry is set to kick off tomorrow. You'll have the Prime Minister, Narendra Modi, come out and inaugurate Semicon India 2025 tomorrow around 10 a.m. is when that is expected. What one can also expect is for the Prime Minister to also attend the CEO's roundtable prior to delivering his address at Semicon India. CEOs of prominent semiconductor companies will be present. As this happens, this will be a 3-day conference starting September 2nd to September 4th. And the focus will be on building a robust and a resilient semiconductor ecosystem in India. Remember, under India Semiconductor Mission, about 10 projects that are related to semiconductors have been approved. As recent as last week, you had the first Made in India chip announcement come in that it will be rolled out from the CG Semi factory in Sanand. So we're seeing more impetus coming on India's semiconductor industry. What is also expected is that there will be about delegates from more than 50 countries, about 2,500 delegates, 350 plus exhibitors, and also country pavilions coming up in terms of country-focused, for example, Malaysia will be there at Semicon India, and there will be a host of startups and companies regarding semiconductors from Malaysia. What we can also expect is more focus on design-led incentives on startups, as well as workforce development in terms of what talent needs to do to capture more and more of the semiconductor industry.
Right, and as India takes steps forward to fortify its semiconductor ecosystem, the Supreme Court has dismissed a plea challenging the rollout of E20 petrol, a blend of 20% ethanol and 80% petrol. The court cited the government's assurance that E20 petrol meets the Bharat Stage 6 emission norms and will help reduce carbon emissions. As is known already, the government plans to roll out E20 petrol across the country by 2025 as part of its efforts to reduce dependence on fossil fuels. But how ready are petrol pumps to roll this out with the proper waterproof mechanisms? My colleague Danish Anand caught up with Ajay Bansal, the president of All India Petrol Pump Dealers Association, about this. Let's listen into his comment.
Problem initially was to how to stop the interaction or moisture to interact with the petrol underground tanks and even the tanks of even vehicles. So gradually it was addressed by the oil companies and the car manufacturers to stop and make arrangement of an engine or a tank to avoid the situation where the water can go and interact with the petrol. And later they came with the technology of silicon cascades or silicon kind of gel, so that this water and mainly moisture cannot be touch or interact with the petrol. So as of now, it's a very remote and very less chances to interact water and moisture with the petrol. So I don't find in case of a tier 1 or tier 2 or tier 3 cities, all the pumps are on the same page and same status, where the technology of stopping the tanks and making the tank full waterproof is already done. Maybe a few cases may be left in case of some accidental or some problematic or something there, but otherwise everything is ready to handle this ethanol blended petrol.
And bringing your attention to another interesting comment, Madhya Pradesh's Chief Minister Dr. Mohan Yadav weighed in on the state's progress at Emerging Business Conclave. He spoke about how Madhya Pradesh is boosting food processing plants to benefit the state. Let's listen in.
अब फूड प्रोसेसिंग पे आते हैं.
हमारे यहाँ होने वाली फसलों का केवल 5% फूड प्रोसेसिंग होता है, 95% हमारी फसल रॉ मटेरियल के रूप में ऐसे ही रह जाती। तो हमने कहा इसकी प्रोसेसिंग करा करके फसलों के उचित दाम दिला करके, चाहे फल फूल हो, सब्जियां हो या फसल हो, सभी क्षेत्रों में प्रोसेसिंग के लिए यूनिट लगा करके अधिकतर हमारे किसानों की ज़िंदगी बेहतर करना। फिर जैसे कॉटन, तो कॉटन हमारा कोयम्बटूर तमिलनाडु या दूर जाता है, तो कॉटन से यहीं धागा बने, कपड़ा बने, रेडीमेड गारमेंट्स की वो अपनी इकाइयाँ निर्यात करे। तो इससे कई कामों को एक साथ चालू किया।
And let's take a look at another big national story. North India is grappling with rain fury, with Delhi and Gurugram experiencing heavy floods. Waterlogging was reported in several parts of Noida, Ghaziabad, Gurugram and parts of Delhi, leading to severe traffic congestion. Several states are under red alert, grappling with rain, thunderstorms, lightning and gusty winds. Monsoon has left a trail of devastation in Himachal Pradesh, with 320 lives lost and total damage estimated at over 3 lakh crore rupees. This is according to the State Disaster Management Authority. Jammu and Kashmir too have been reeling due to cloudbursts and flash floods, with nearly 40 lives being lost. Home Minister Amit Shah visited Jammu and Kashmir to take stock of the flood situation. Let's take a look at my colleague Gurpreet's ground report from Amritsar now.
In Punjab, we have seen the people are grappling with multiple problems, and specifically in flood-hit areas. We have seen SDRF team is going to the people who have been stranded in the various locations of district Kapurthala, and we are going along with the team and showing all these pictures, what is the condition and what is the real situation on the ground. We have seen the water level is still high, and that is one of the reasons why this boat is being used by the SDRF team to deliver all the food items, medicine and other things, so that those people who have been stranded in their houses, at least they could get the food and other item, and they should not face much problems. We are going along with the team to show each and every report from the ground, what is the ground situation in Punjab as of now.
And we have a Mumbai-centric news for you. The Bombay High Court on Monday took a strong stance against violations of the order on protests for Maratha reservation. The High Court has directed all the protesters to vacate all places in Mumbai except for the designated place, that is Azad Maidan, by 4 p.m. on September 2nd. To give us more insight from the heart of the protest, NDTV's Anuj Raide sent in this report earlier.
A petition was filed in the Bombay High Court by ME Foundation first, and then later, of course, many other organizations and people joined in that petition, which was primarily against the nature in which, the Maratha Andolan or agitation is happening here in South Mumbai. The basis of this petition was that the original agreement that was made on 26th of August, with which the protesters had agreed with, has been violated seriously. And the Bombay High Court took cognizance of that matter today afternoon and made it very clear that, grave violation of that agreement has been made. But before I get into the details of what were the observations being made by the Bombay High Court, let us try and have a look around us. There's a stark contrast to what we saw in the afternoon, because we've been covering, this entire matter from the very spot where the protests are, happening very, very strongly. And we know that in the afternoon there was a lot of music here. There were a lot of people dancing, and people were also getting onto the buses. And there was some untowardly activities that we were seeing. But after, there was a clear instruction and observation by the court that all of these things need to be stopped immediately. One can see that difference is seen on the ground. In fact, besides the BMC officials, it is also the Maratha protesters who are now taking matters into their own hands and are cleaning the streets here, showing their agreement and cognizance with the observation being made by the Bombay High Court. Now, getting deeper into what the Bombay High Court actually observed, they also said that the protest needs to be restricted to the place where, where the designated place was given, that is the Azad Azad Maidan. We know that the protest did spread across, especially the South Mumbai area, and the court said that they have come across videos where protesters are seen blocking roads, creating some sort of nuisance, not just for the police but also for the local residents, and that needs to be avoided. And for that, they said that from 4 p.m. tomorrow or until 4 p.m. tomorrow, the protesters need to only restrict themselves to the Azad Maidan. And this was the primary basis of the observation that was made by the court. They also very importantly stated that no more protesters from other parts of the state should join in the protest. Now that becomes very important and crucial because Manoj Jarange Patil made an open appeal not too long ago where he said that if the demands are not met with, Marathas from across the state will come to Azad Maidan. But now the court has said a complete no to it and has told the administration to make sure that no more protesters from different parts of the state join in the protest. In fact, it has also restricted the place where the protests will happen. Chief Minister Devendra Fadnavis has also responded to that and has said that they will take in all of the matters all of the observations that the High Court has made quite seriously and will make sure that no more people from across the state will join the protest. Now again, as I said earlier, it will become very interesting on whether there will be any new conflict between the protesters and the government on that particular issue. But as I started with earlier, one can see that there is a bit of difference on ground at least, especially 2 hours after the court has made its observation. But we'll still have to wait for the next couple of days to see on how much the situation changes in agreement with what the court observation has been. The next hearing of Bombay High Court on this matter will be at 3 p.m. tomorrow. With camera person Rajendra Dayalkar, this is Anuj Raith reporting for NDTV from Mumbai.
Right, and with that, it's a wrap-up on this edition of Profit 360 viewers. But do stay tuned to the channel as we have a lot more lined up for you right on the other side of this very short break.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं दिवाली के अंदर.
This festive season, India's tax landscape will light up. NDTV Profit brings you an exclusive deep dive into the next-gen GST reforms for resurgent India. From the impact on markets and economy, join us as we decode what these reforms mean for businesses, investors, and you.
Tech has changed, so should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
That will be one stock and one space definitely in focus ahead of the big GST meet. So it's an action-packed week, so much happening, and we want to unpack it now with Rajiv Batra, head of Asia and co-head of Global Emerging Markets Equity Strategy at JP Morgan. Rajiv, thank you so much for speaking with us. I'm actually going to start with your take on the GDP numbers which have come in. And do you think that for global investors who've been a little cautious on India, does this sort of tilt the scales a little bit and balance it out?
Thanks for having me back here, Tamanna. So GDP growth, I will say it's the double-edged sword. If you will try to present a positive picture through real GDP number, which has come at a handle of around close to around 7.8% mark over there. people will still grieve around by saying the nominal GDP growth is only 8.8%. So it's a kind of a lens which investors want to see. If you are looking at the real GDP print, definitely it's a good news showing that the macro momentum is coming back into the picture post the monetary easing that has started from November last year onward with CRR cut, and now being followed by the fiscal policy making. But yeah, nominal growth mark almost way below the 10.5% kind of a territory has been a concerning factor, and that's what your earnings usually follow, and that is currently being putting doubts on the foreign investors' mind that whether they should look at the real GDP print or they should focus on nominal GDP, which is declining.
Fair points, Rajiv. Good morning. Wonder what you are focusing on, and also because it's a lag indicator, is the outlook ahead as sanguine on the growth front, which can impact the market view. And I can tell you, Rajiv, that when you put out that note of the target of 26,500 to 30,000, the market was divided then. Since then, the 50% tariffs have happened, but the GST cuts have happened. All of that has happened, and the market is still divided. I would love to know which side you are on right now.
I'll still stick with my tone of 26,500 base case to 30,000 bull case. The key things which has happened in India is that in India, we have moved from twin policy tightening zone, which was damn bad for the growth for consecutive last 2 years over there, to a twin policy easing mode. Remember, back in November, we were railing under pressure of both monetary policy tightening also, as well as fiscal policy tightening too. When the December arrived, we saw under the new RBI governor, CRR cut started happening. That followed by 100 basis point of policy rate cut and close to 150 basis point of CRR cut overall. Now we are seeing fiscal policy making is joining the bandwagon too. We have seen some bit amount of fiscal subsidies during the election period, followed by middle class tax rate cut or exemption, which was raised from 300,000 rupee to 1.2 million rupee. And now we are seeing a potential GST tweaks. So that has been the interesting set of economic outcome. We are seeing the twin policy easing, which in a matter of quarter or two starts showing the impact. Think about it. If monetary policy easing single-handedly helped us around reviving some macro data point and this real GDP print, why not when the twin policy easing comes into the picture overall, it may help revive growth faster way. No doubt, there has been an offset from external demand slowdown as well as this tariff-related tension, but it will still keep India's growth above water, where in other parts or other countries we are seeing growth is under tremendous pressure.
Just on the point of the GST rejig that we're expecting to see, and we know for sure that we're going to a two-rate structure. Now the only question is about what falls where, is there income, input tax credit, etc. What is the quantum of boost that you expect this to have? Because there is a sort of a mixed view on this. There's one camp who says that this will be the big catalyst and a consumption boost, and there's another that saying that compared to what the tariffs are going to do to businesses, this will only maybe mitigate the risk to some extent. Just wondering how you look at the impact of this GST rejig.
So this week committee meeting will be really important to see how the GST cuts will be given on and how much it will be neutralized by introducing a 40% slab or by giving any compensatory cess overall. So the number which we are anticipating should be in the range of 0.4 to 0.6% of the GDP in terms of a benefit. It should come on to people in a direct term when the GST rate get reduced. The indirect benefit, because the rate is reduced, can lead to a higher consumption overall, which could be the material one, because it is not just coming on the back of GST rate cut, it is also coming on the back of liquidity being eased, borrowing rates got lower over there. So it's kind of a double booster you are giving overall. But in terms of how much the final number will look like, we need to look into how this week's GST committee meeting gets concluded and what are the new measures that is brought down to neutralize the revenue losses that will going to happen.
What's your base thesis of what happens over 18 months per se? Do you believe that, I mean, because the negative is that if the tariffs were to stay on, then that has an impact on some export-oriented sectors. maybe the multiples, etc., are something that a few people have pointed out, right? And parallelly, the thawing of relationships on the eastern side, etc., might open up some markets, might open up some imports of key raw materials, etc., which helps business as well. But combine all of this over an 18-month period and not just over the 6 to 9-month period, what is your thesis there?
No, Neeraj, good question over there. When you bring a longer lens over here, one thing we need to recognize that tariff or no tariff, global growth is expected to slow down. We are forecasting US GDP growth to slow down to 1.5% next year. Similarly, growth in case of China next year expected in the range of around 3.64% only. So in case if global growth is slowing down, my exporters are bent to definitely will be getting impacted due to that one thesis also. In mix, if you are throwing in the higher tariff and uncertainty related to that, then definitely it's somber or more much more further. So taking that lens into account, exporters as a big pillar or a contributor to the GDP overall, and also the drivers of entire emerging market trade, because when you look from GDP growth perspective in Asia or in emerging market region, since COVID, exporters have been the key driver for growth overall, and that exports got further boosted by fixed investment. Private consumption, or you can say domestic consumption, was funding source toward that. Now suddenly when the external demand is slowing down, tariff uncertainty is coming back into the picture, not just in India, across emerging market, we are seeing people are working to support the private consumption or revive the domestic consumption in economy. So all in all, if we bring everything back on the table per se, it seems like domestic demand over exporter or consumption over capex as a theme will be one can play from an 18-month perspective, and also taking into account the liquidity situation is quite benign outside. And as you go into the next year, if you look at the fiscal deficit of the G3 or G4 countries or monetary policy, even they are on the easing term. Like US is expected to expand their fiscal deficit by 70 basis points under OBBA. China is expected to expand by 40 basis points and Europe by 20 basis points. With monetary policy easing as well as fiscal easing taken into account, lot of dollar liquidity is going to hit emerging market over the 12 to 18-month period, which will be good news for India too.
That was going to be my question, Rajiv, that we've seen over 50,000 crore rupees of selling in July and August alone in India. I mean, does the FPI mood turn at the sign of growth, and the GDP growth has been strong, or is it dependent upon earnings in maybe the second half of the fiscal year, or is it dependent upon geopolitics? It could be a combination of all, but which is the linchpin on which the FPI dollar or the FPI dime will turn on India?
So if you look at last 1 year India performance, where India has driven close to around -5% or -6% kind of a return, and you try to do dissection between currency performance, earning growth contribution, and valuation re-rating or de-rating. So India over the last 1 year has seen 10% de-rating. Earnings contribution has been around 3.5%, and that leads to around 6.5% negative return. But when you look at the broader emerging market or the bigger EM guys, they have enjoyed close to around 11 to 12% P re-rating, whereas the earning growth contribution, the return is only 1.5%. It is significantly lower than what India has done. So what India is rallying under pressure is today higher risk premia due to the trade uncertainty. If trade uncertainty subside and along with them you are offering a higher earnings growth, then India trade will be back in picture. I have said time and again that investors don't come to India for lower valuation. Investor comes to India for sustainable higher earning growth. That was missing for the last 4 to 5 quarters, which is slowly, steadily making a comeback. Just concluded earnings season, we have seen 9% PAT growth. That has come after a long time. If we can build on that and achieve 11 to 12% growth mark, which justify the valuation, that is the PEG ratio of around 1.9x to around 2.2x, then foreign investors will be back in India. So growth, earnings growth particularly, is of paramount importance. And then certainly to enjoy the re-rating, we need to bring down this geopolitical related headlines and uncertainty and make it as a page 3 and page 4 item.
I think we can all safely say that is something that no one can predict and no one knows how it's going to go as far as geopolitical headlines are concerned. Having said that, with earnings looking like they're improving perhaps, and what we're seeing maybe Q2 will continue that momentum, where do you see those pockets of value, Rajiv?
The pockets of value still, I will say broadly, is in financial space, is in the real estate space, in the select commodity-oriented sectors where there's a value overall. But we do anticipate entire domestic set of sectors are going to see a positive earnings momentum because of the policy shift which we have seen, whereas there are going to be still drags overall, and drags are going to come again from IT sector, which is largely being impacted by what is happening on the Gen AI and the end demand in the US, followed by pharma, which have a specific like set of a drug that is getting off patent, impacting them. And then some of the export oriented, which are very small, you can say percentage of the NSE 500 benchmark going to be a drag. But domestic demand oriented, be it your financials, consumer staples, consumer discretionary except auto, followed by your hospitals, material name, which include cement, paints, steel. These are the sectors we anticipate are going to show you a rising earning growth or a positive earnings revision trend also in the coming quarters.
Okay, now, I'm just wondering if you think the mood will turn favorably on Indian IT as well, Rajiv. How are you looking at it? Because I think this is one space that has everyone divided, sometimes a good day, sometimes a bad day. But apart from the short-term moves, in terms of sustenance and valuations, what is the view that you're forming on the Indian IT pack?
No, usually you need either a quite inexpensive valuation, which we are not there yet in terms of a territory to change the mood. We are still in the marginally below plus one standard deviation benchmark around 23 or 24x kind of a P. If we start coming below average mark, then yes, it becomes a value bet and my value investors will start looking that particular space. Or we want conditions to change where we start seeing that external demand is turning pro-growth overall. Gen AI side, some of the efforts are being put from the companies on ground, and they also start becoming a proxy AI play rather than being operating as just a plain vanilla software services companies only. So either of the scenario, if it plays out, then IT sector could make a comeback. But so far, what we are seeing for the last 2 quarters, going into the earnings season, first 1 month prior to that, investor trade into that theme. As soon as the first result get out, people start selling or people start creating short on this particular sector. So it is operating in a trade kind of a zone and hence underperforming my MSCI India or a Nifty benchmark.
Okay, thank you so much, Rajiv, for speaking with us. Always a pleasure to have you here. There you have it, Rajiv Batra, Head of Asia and Co-Head of Global Emerging Markets Equity Strategy at JP Morgan.
Welcome, you're watching NDTV Profit. I'm Mahima Vachrajani. The stock that we are focusing on today is Easy Trip Plan as well. Lots happening with the company, especially the changes in the top level management. And to discuss as to how things will fare out from here on, we're joined by Nishant Pitti, who's joining us now to discuss him being appointed as chairman and MD and the resignation of Prashant Pitti as well. Nishant, always a pleasure speaking with you. My first question to you is this new change in management. How is that being viewed, first of all, and how will this augur growth for the company?
So thank you, Mahima, for having me here. So we are planning to shift Easematip just beyond travel, and we are focusing on going into new areas. When we have 3 crore users of ours, we are a bootstrap company listed in 2021 itself. Before that, 100% of the company belongs to the promoters. Now we are going ahead with Easematip 2.0, in which we are just not circulating towards travel. And we'll be growing, expanding our verticals beyond travel and, acquiring certain few companies. which we can add on to the consumer base and give benefits to our consumers.
And Nishant, when you say you will be exploring new areas other than travel, can you give us a perspective as to what those areas will be other than travel?
It will be wellness, it will be medical, it can be many other areas which we are focusing on.
Okay.
We'll be notifying the exchanges soon for that.
All right. And in terms of the entire acquisition that you're planning of different verticals other than the travel space, and you said that you're a bootstrapped company already, all these acquisitions will be done via internal accruals, or will you be planning some fundraise on the cards or any debt raise on the cards?
No, we'll not be taking any debt on the books, so it will be all internal accruals.
All internal, okay. No fundraise on the cards, correct?
Nothing, not as of now.
All right. Okay. In terms of the Ease My Trip 2.0 that you were talking about, give us more perspective as to how this will pan out for the company from a longer term perspective. The acquisitions that you're doing, in terms of the growth CAGR that you're penciling in terms of where top line stands.
So right now, as of now, we are doing at Ease My Trip 2,000 crores of quarterly bookings. Near about 2,000 crores of booking we are doing on a quarterly basis, in which our mix was, when we did our IPO, the mix was 95% of the flights and 5% of other products like hotels, cars, trains and other things. But now we are focusing on primarily to increase our mix from 95, and we have been doing it. Since right now our mix is 15% of other products and 85% of products, 85% of our flights is selling on our platform. So we are trying to shift this mix, which is the industry standard. Right now, the industry leaders does 60 to 40. And the margins in other products is really much better than the flights. And flights for us, we feel that it will be soon a duopoly situation in which Tatas and Indigos are already there and they would be taking care.
Right.
So we don't see much of traction in the flight segment, but for hotels, yes, we are building up quite heavily.
And what kind of growth are you penciling in for FY26 in terms of where your top line stands? If you can give us some perspective in terms of percentage.
So we are just pointing out around double-digit growth into the flight segment or hotels or other things. But you see in hotel segment, we have been growing almost like 150% YOY.
When you say double digit, can you give us a rough range? Because double digit, can be a vast range.
So we are not, as I told you, we are not particularly focusing on the flights part. So yes, in hotels and our international expansions, we have been seeing almost 3-digit figures growth YOY.
Nishant, in terms of your peers who are in the same business, a lot of these peers are actually now focusing on the corporate travel part. You've also signed a pact with one bank which is going to help you with corporate travel and AI based corporate travel. Give us some perspective with regards to this segment and how do you plan to grow that, and how are you using AI to boost your platform overall?
So we are growing rapidly. We are focusing more on corporate side, as you rightly said, particularly for flights, hotels and other products. So recently we have tied up with BCCI. All the bookings for BCCI are happening through us. We are tied up with, recently we had done Punjab Cricket Association. Like they're also tied up with us. More corporates we are adding on our kitty, and we are focusing on corporate segments as well.
I'll come to you first with regards to this new surprise number that's come in. It's highest in the past 5 quarters, a 7.8% growth. How are you reading this, and is this kind of growth sustainable?
Thanks a lot, Mahima. The numbers have come as a big surprise, as you rightly mentioned. And I think for the corporate sector, it's a big positive. So this number has come as a big positive. I think not only is it the fastest growing growth globally, but I think it will be a clear outlier. So in terms of just the sheer growth that India will be delivering as compared to what is happening globally and what everyone expected, I think this is a massive surprise on the upside. Your question on whether this growth will be delivered, will sustain or not, I think the India's average growth, what has been projected is 6.5%. And right now people are anticipating that India should deliver on the GDP growth. I don't think anyone is saying upgrading. Most people are saying it will be in that corridor of 6.4 to 6.6, 6.7%. And that in itself will be very, very creditable if that happens. And there are sufficient positives that are likely to come in the next 6 to 9 months.
Nominal growth has fallen to around 8.8% in Q1. What are the implications that are going to be in terms of fiscal deficit given the lower nominal GDP growth and of course the impact of GST cuts that are going to come in the festive season?
Yes, the nominal GDP growth has been lower. We don't anticipate that the impact on fiscal deficit will be very high because of the GST cuts. I mean, we still have to see how a lot of things get calibrated. But our view is that the impact will not be that high. And there are lots of the extra duty that was getting collected to repay the loans earlier as they come off. I think some of that will be active as a cushion. So at least we still have to wait. Our anticipation, I saw some of the states announcing that there will be big impact. We don't anticipate that there will be a big impact on GST because of the rate reduction. In fact, I think it will lead to a positive GDP impact of 0.2, 0.3, 0.4%. Again, these are all till the time we don't get the full details.
Right.
We will not get a full picture. So that is one. Also the anticipation is that the inflation is likely to move up slightly. The government or the Reserve Bank is also likely to reduce the repo rate in the quarters to come. And once that happens, it will give a demand fillip, and it will also give an inflation. There will be some level of inflation which will be there. So I think hopefully the delta between the real growth and the nominal growth will come down. And I think if you look at the overall fiscal deficit, I think the concern obviously is that the tax revenues haven't grown to the extent that they were projected, and most of it is because of personal income tax. I think the GST growth is more or less there. The personal income tax is down by 9% or so. I think we've also had the tax return date deferred to end of September, so middle of September. So I think once that date, once we go through that, I think it will give us a better picture on the impact on personal income tax, partly because of the relief that was given to the personal taxpayers. I think some impact may be there because of that. Some impact may be there because of maybe capital gains will be lower. So I think that will be there, but I think once we are end of September, I think we'll get a better picture, because I think the personal income tax will increase significantly once we come to end of September.
Understood.
Also, you have benefits because of the GST rate coming down. I think the growth impact will be better. The impact of lower interest rates has been there. I mean, if you've seen private final consumption has also gone up by 7.5%. That impact is playing, but I think that impact will continue to move up, and that will also have a positive impact on the sort of overall GDP, consumption, and tax collection.
And talking about that tax collection, do you think that tax collection targets now look more ambitious, given that the tax buoyancy will have to improve?
I think GST collections should be strong. I think they're going strong. On corporate tax, the refunds have been very high, so I think there's still some time. And on personal income tax, as I said, because the returns have been delayed by 3 months or so, I think we'll get a better picture, because right now we are not comparing apples with apples. But yes, I think as compared to earlier years, where last year, the direct tax collection sometime around this time was in its high teens growth. The delta is quite significant this time. So there will be some stress on the overall sort of tax collection. But there are lots of levers that the government has for bolstering the revenue growth. Some of the other assumptions that they've taken are quite conservative.
And then do you see any impact in kind of the government borrowing estimates going forward?
I mean, till now the government borrowings are okay. So again, it's too early to say. It's linked to fiscal deficit, and at least our view is that the nominal growth should pick up, and because of that, I think the tax collection should move up. There are other levers for augmenting revenues that the government has. So if they fully exercise that, I don't anticipate any issue of government borrowings at this stage going up. I mean, we have had a very good monsoon. That positive is there. The GST reduction positive will come. Interest rate reduction is there. Yes, there will be an impact because of tariffs. But hopefully that impact is contained in one quarter, and then we get, as and when the issue gets resolved, we will get the uplift in the subsequent quarters.
Last question about the capex that you were talking about. Will we see some kind of slowing down in the second half where government capex is concerned, and that versus the private capex? What are your expectations?
I think government capex will probably moderate. It is right now growing at 32-33%, so I cannot imagine that it will have the same rate. But please do remember that last year we were through the election phase. So any percentage that government expenditure had really come down during this period last year. So I think we may not be the comparison may not be like for like. But yes, the government capex cannot continue to grow at 33%. So that percentage will come down. Absolute numbers, I think, will still continue to be strong. And I do think if I look at the announced projects, and the closure projects, at CII and when we have done the analysis of announced projects, 90% of the new announced projects have come from the private sector. So I think hopefully as those projects get on stream, the private capex is also likely to move up. And also the closures of so that means where the projects have closed, i.e. where the capex is completed and they have been launched or commissioned. I think that number also has moved up significantly. So that means that there is more closure happening, more output coming through. So I think that's also positive. So private capex should pick up and will pick up. Obviously, there were a lot of headwind, tariff-related uncertainty. And as government pushes the pedal on reforms and ease of doing business, there are much greater positive momentum that will come through, which will push private capex even more.
Understood. Mr. Memani, thank you so much for giving us those insights. That was really helpful, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much. My pleasure. Thank you so much.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
Thanks for tuning into this broadcast, and we're calling it a Diwali Dhamaka so early because the PM did mention that it's Diwali gift to the country, the GST rationalization. And what we've tried to do over the next 25 minutes is talk to two very eminent voices on what is their view on the impact that the GST changes can make. Now, before we get in our guests, let me try and tell you what brokerages are saying about this. So, multiple